This 5-minute scalping strategy uses volume delta to solve the most expensive problem in day trading, buying a retest that is actually a trap. Look at these two identical breakouts. Both pull back for a perfect retest. If you trade pure price action, you buy both. But chart A pays out a clean 15-point scalp, and chart B instantly dumps and burns a $200 stop loss. The difference is not the price, it is the hidden order flow under the candle. First, add the volume delta indicator on TradingView. Volume delta shows exactly who won each individual candle. Green means buyers pushed harder, red means sellers had more power. Price is just what your eyes see, but delta is what is actually happening under the hood. So from now on, delta will act as your permanent lie detector for whatever price is showing. Now watch this. Price taps the level, then it pulls back. Then it returns and breaks above it. You may want to buy this before the move leaves without you. But look, the delta bar under the breakout candle is small. It's not stronger than the candles before it. That tells me the break has no real power behind it. The correct decision is no trade. The level broke, but nobody's strong inside the candle. My scalping strategy confirms all entries using volume delta, but only when levels flip. That's because the first break is only proof that a level deserves attention. Here is what a clean setup actually looks like. Price pushes into resistance again. This time, the breakout candle prints a strong green delta spike right at the level. That matters because buyers showed force at the exact area where price kept stalling. I still don't enter on the break. I mark the level and wait. The hidden edge is this. A level is not important because price crossed it. A level becomes important when strong delta appears at the level before price moves away. Watch this support area now. One candle breaks below it. The candle is red, but delta is weak. My call is no short. A weak delta breakthrough support is not proof. It is just price poking through a floor. Compare that to this chart. Price breaks below support, and the red delta spike is much larger than the recent delta bars. That tells me sellers hit the level with force. I mark the broken support and wait for price to retest it from below. I want a flip, the old support to become resistance. What used to look like a breakout now looks like an audition. If volume delta spikes at a level and price breaks it, mark the level. If there is no spike at the level, ignore the break. Now the spike tells you the level is real, but it does not tell you where to enter. That is why the retest exists. Watch this long setup. Price trades under resistance. The market keeps hitting the same ceiling. Then a strong candle breaks above it with clear green delta. Most traders buy that candle. Then price pulls back, touches the same level, and shakes them out. That does not mean the idea was wrong. It means the entry came too early. This is the correct entry. I mark the old resistance and wait for price to come back. When price retests the level, the candle wicks into it and closes back above it. The delta under that retest candle is green. That tells me buyers still control the level, so I enter long after the retest candle closes. My stop goes under the retest low. My first target needs at least 1.5 times the risk. That is the clean version. The break creates interest, but the retest creates the trade. But a fast chart can trick you with speed. Price breaks above resistance with green delta. Then price pulls back hard. For a second, it looks like the breakout failed, but the retest candle holds the level, and the delta under that candle is green. The correct call is a long trade. The pullback looks scary, but buyers still want the candle at the retest. But a perfect touch can still be a trap. Look at this. Price breaks above resistance with green delta. Price comes back to the level. The touch looks perfect. But delta at the retest is red. That means sellers won the retest candle. The price touched the level, but buyers did not defend it. No trade for now. We want to see buyers coming in. There is one more filter, the math. Price breaks with strong green delta, retests with green delta, but the nearest target area is too close. My call is still no trade. I need a real reward area beyond the entry. If the trade cannot pay at least 1.5 times the risk, I leave it alone. Now look here. Price breaks the line. The green delta is huge. The retest offers a green candle with a green delta. The setup is perfect. We enter right here, but price doesn't bounce. It drops straight down and it hits the stop loss. So why did it fail? It does not matter. Maybe the buyers weren't as strong as we thought. Maybe it was a liquidity sweep designed to trap buyers. It doesn't really matter. You cannot control that. Your job isn't to win every time. Your job is to take the perfect setup. When it fails, you take the small loss. And please, don't change the rules because one valid trade lost. The break had delta, the retest held, delta matched the long. That is a valid loss, not a bad trade. The cost of doing business. So remember this, the break of a level is bait until the retest agrees. This is the in or out rule. If price breaks with a delta spike, wait for the retest. At the retest, green delta opens the gate for longs. Red delta shuts it. The same rule applies to the short side, but shorts are where most scalpers get chopped to pieces because their brain misreads the pullback. We're looking at S&P futures. Price keeps holding above support. Then a strong red candle breaks below that level with clear red delta. I don't short the first break. That is where late scalpers sell after the move already stretched. I mark the broken support and wait for price to come back up into it. The retest candle touches the underside of the old support and fails to close back above it. Delta prints red again. That tells me sellers still control the level. So I enter short after the retest candle closes. My stop goes above the retest high, and my target needs at least 1.5 times the risk. This is where most traders get chopped up. Price breaks support with red delta. It retests the level, but the candle closes back way above the broken support. Again, no trade. I saw no reaction from sellers at the level. For a short scalp, I need price to reject the level. I want to see some strength. If price gets back above it, the retest failed. So novice scalpers enter because the candle is red and it moves fast. You are not doing that anymore. You are asking one question. Does the delta color match the trade direction at the retest? For a short, red delta opens the gate. Green delta closes it. Now, once you can read the retest, one more layer turns a B setup into an A+ setup. Let's look at a setup that feels wrong, but is actually A+. Price breaks above resistance with strong green delta. I mark the old resistance and wait. Price comes back to the level and the retest candle is red. If I only watch the candle, I think the setup is dead. But check out closely the volume delta. The delta under that red candle is green. That means the candle looks bearish, but buyers won inside it. This is your hidden edge. The next candle is a green one with a green delta. I enter long immediately. My stop goes under the retest low. That red candle was the biggest clue. When you scalp, the best retest can look wrong at the exact moment it is right. And scalpers skip the strongest entries because they can't see this. At a long retest, most people want a green candle. It feels safe. It looks clean. It makes the entry feel easy. But the market does not always give you a clean-looking candle. Sometimes the strongest long retest prints a red candle because sellers are pushing price down while stronger buyers absorb them. Think of it like someone pushing a door closed while someone stronger keeps forcing it open from the other side. The red candle shows the push down, but green delta shows the buyers absorbing that push. This only matters at the retest level. In the middle of the chart, a red candle with green delta is just information. At the retest, it becomes a hidden green light. This is S&P futures on 5-minute. Price breaks below support, an area where price struggled to move lower with strong red delta. I mark the broken support and wait for the retest. The retest candle is green. Most scalpers see that green candle and cancel the short idea. It looks like buyers are taking control. But you know better, you check delta. And the delta under that green candle is red. That means sellers absorbed the buying at the retest. Next candle is a red one with red delta. So the correct trade is a short one after the selling pressure is confirmed. Stop above the retest high and target at 1.5 R. And look, price rejects the broken support and drops into the target area. That is the delta divergence. For a long, the candle can look red, while delta is green. For a short, the candle can look green, while delta is red. So what used to look like panic now looks like hidden pressure. Again, price breaks above resistance with green delta. Price comes back to retest, and the candle is red. That looks like the setup we want. But look, delta is also red. No trade yet. Let's wait another candle for clarity. And look, price drops. The filter saved you from a losing trade. That was selling pressure, not a buy. Another one. Price breaks below support, and delta is red. Price retests from below. The candle is green. But delta is also green. Again, we wait. No trade yet, because buyers are winning the retest candle. Several candles later, we got a red delta. Now we enter. So note this down. If price retests the level and delta matches the trade, you can enter. But if delta fights the trade, it's better to wait for clarity. Delta is your hidden edge. It protects you from chasing the break, from buying the touch, and panicking on candle color. It gives every retest one question. Who won the candle under the level? But none of this matters if you don't do this one thing today. This is your scalping checklist, and you should print this. Find one place where price broke away from support or resistance. Check the delta under the break candle. If the delta spike is missing, cross the level out. If the delta spike is strong, mark that level and wait for the retest on the chart. When price comes back, ask one question. Does delta match the trade direction at the retest? For a long, you want green delta at the retest. A red candle hiding green delta can still count. For a short, you want red delta at the retest. A green candle hiding red delta is still valid. If the answer is not clean, the trade does not exist. Then simply open the replay function on TradingView and train your eye to find the perfect setup. Look, price breaks above resistance with green delta spike at the break. The retest candle holds above it and delta prints green again. This is a long after the retest candle closes. The stop goes below the retest low. The target has enough room. Now right here, price breaks above resistance with green delta. The retest candle is red, but delta is green under that red candle. Buyers won inside a candle that looked bearish, and the next candle confirmed that buyers are present at the flip level. This is a valid long. But what we didn't cover is how to pick which levels are worth marking in the first place. That is the filter that separates A+ setups from random noise. That's your next video. And this is exactly the kind of setup we break down inside our academy. See you inside.